Hello everyone, welcome to CoinsApp. Myself Vignesh. Thanks everyone for joining in this video, and I hope you people might have definitely installed CoinsApp. If anyone is new to the CoinsApp and you haven't installed yet, kindly install CoinsApp application, because as soon as you install, you will get access to 25 free tools. Okay, so as you know, there are almost, I would say, approximately 70 to 80 tools in CoinsApp application. So out of those 70 to 80 tools, 25 tools are free. You can definitely explore them. Apart from that, if you want to know more about the paid version, like exactly how you can use those tools to improvise your trading, how you can optimize using those tools, what you can do is go to learn section, go to video library. And what is video library? Video library, I would say, it is basically the banks of videos. Okay, you will be getting almost all the videos over here of CoinsApp application. Here we have covered almost 4 languages, English, Hindi, Marathi and Tamil. So you will be getting access to almost all the videos. You can definitely go out and check them. You can explore them. Okay, and if you have any queries, you can see the helpline number over there. So you can contact us and we'll respond you immediately. Okay, so let's get into today's topic. You might have already seen in the thumbnail. So today's topic is about how to approach the sideways market. Okay, see, what usually happens is, whenever a stock gets into a triangle pattern or something like that, what usually happens, the stock usually says sideways, correct? Because if you see, triangle pattern is, I would say, one of the most frustrating pattern to trade. I would say a descending triangle or say an ascending triangle. We usually, being a retailer, we expect the stock to break, but what happens is the breakout usually doesn't come. Okay, you feel like the stock is about to break, but usually it stays sideways and it doesn't break, correct? So let me take you to an example and let's check out. Okay, let me give you an example. Say for example, let me plot SBI cards. Okay, so see this. See here, if you see, let me draw a trend line. See this. This is an ideal example. The stock tried multiple times, but it failed to break, correct? See, this is getting narrower and narrower. See, multiple times it tried. See how many times it tried, but did it break? The answer is no. But each and every time, whenever it approaches the breakout, being a retailer, what we do? We jump and we go and buy a call. See, an ideal scenario of SBI card. Okay, this we can say a classical triangle pattern. So in this kind of pattern, what happens is retailers usually get trapped. But who makes money in this kind of stocks? Whenever the stock trades sideways, or say whenever there is a sideways pattern being formed, who usually make money? The call writers, correct? So how to approach this kind of market, and what would be an ideal strategy that we can deploy to make money? Okay, so let's go and check out. Give me a second. Okay, so before starting, give me a second again. Okay, see, what usually happens is, say these are the levels, say based on technical charts or based on open interest or anything. What usually happens, a stock moves in this manner, correct? A stock usually moves in this manner. Whenever a stock approaches its resistance, say usually retailers tempt and they expect a breakout, and whenever the stock approaches its support, we usually expect a breakdown or a reversal, but usually the stock moves in between these levels. So how to trade whenever a stock is, say, a range bound? If the stock is range bound, how you would take a trade? And before concluding that the stock is going to stay range bound or there is a range in which the stock will move, how you are supposed to mark the levels? One is technicals for sure, no doubt. Okay, but what usually happens is, say for example, these are the levels. Okay, but say for example, if the stock is moving this way, say multiple times a stock has tested a particular level, what happens? That particular level might have become vulnerable and there is a possibility that the stock might break out. So what exactly will give you the answer that whether this level is going to hold or whether this level is going to break out? So for that, what you need is data, correct? Because without data, we exactly can't conclude whether we are going to break that level or we aren't going to break that level. Okay, so let's get into the home page of QuantSap application. Okay, so click on the search option and let me go and check open interest, because open interest, I would say, is one of the strongest data based on which you can say which level is going to hold in the market. Okay, so let's say take any steady stock like, let me go and take out, say, State Bank of India. Okay, let's go and choose State Bank of India. Now see, here if you see in open interest, you can go and select any stock, whichever you feel comfortable, and then here is the expiry, whichever expiry you are willing to trade. Accordingly, you can definitely go and plot the expiry. Here the lot size is mentioned. Okay, and see, this is both call and put. Like if you want to see only calls, like where the call writers are present, you can select call. If you want to check where the put writers are present, you can definitely go and check out only put. Okay, say call. See, only you will be seeing the call writers, and if you want to see put, you can say. But I will go and choose both because I want to see the support and resistance simultaneously. Correct? Now, see, also you can see it will be in horizontal format, vertical format, like you can view it as per your convenience. Okay, but I'll go with the default format as of now. Now, if you see in State Bank of India, the future price, I have plotted 29th August because this month's expiry is done. So we are heading towards August expiry, correct? So currently the future price is trading at 863. Now, let me click on this. Now, what is this open interest? How? Let me explain you this interface. Let me give you a quick glance. Okay. So here, if you see, a dark green box is mentioned. So this is like call addition. Okay. Whenever you see such kind of dark green boxes, you can say call writers are getting added at these levels. Now here, if you see call unwinding, whenever you see any green hollow box, that is basically call unwinding, and see a red dark box, if you see, that is put addition, and a red hollow box is basically put unwinding. Okay, so now say for example the current price is somewhere around 863 and I can see the strongest call writers are present somewhere around 900 levels. If you see, approximately 47 lakh contracts are opened at 900 level and 93,000 contracts have been added today. And if you see, the strongest put is somewhere around, I would say, the strongest put is around 800 levels. Okay, you can see the strike over here. The strongest put is trading, strongest put is somewhere around 800 levels. So as of now, for August expiry, we can consider that 900 is a strong resistance and 800 is approximately a strong support. So meanwhile, let me mark this. We can expect the stock to trade this way. Correct? The stock might be range bound. Correct? But what happens now, once you conclude that the stock is going to stay range bound, what you will usually do? I will go and sell a call over here. I will go and sell a put over here. But what if the stock surges? Okay, or else it gives a strong breakout or a strong breakdown. In that case, what will you do? See, because if you are an option trader, if you are selling a strangle or say if you are selling a straddle, there is a possibility that if the stock moves in either direction, you can lose handsome money, correct? You can lose a lot of money over there. Now, in this kind of scenario, if you are predicting the stock to stay sideways, what you can do is you can either go and deploy I would say a short iron butterfly or a short iron condor, correct? Because this is the kind of strategy which you usually deploy if you want to trade a sideways market. So for that, let me go to trading, and under strategy builder, I am selecting option architect. Okay, so here if you see, if you are bullish on say XYZ stock, it will give you n number of strategies, whichever you want to choose. But what I want to do is I want to customize the strategy, so I'll go to custom. So I have selected the custom option over here. Now what I'll do is say what is a short iron butterfly. Okay, short iron butterfly, I would usually what I'll do is I am going to sell a straddle, okay, a short straddle, and then I'll add the wings to protect my position. Okay, so let me add one leg, say a sell leg. 860 is the CMP, so it has automatically fetched 800. Say I am going to sell a 800 call. I am going to sell 800. Give me a second. 800. 860 call I have sold. 860 put I have sold. Now, what we saw in the open interest, I saw that highest call writers are somewhere around 900 levels and the highest put writers were somewhere around 800 levels, correct? So now, say for example, I am going to hedge my positions by buying a 900 call and by buying a 800 put. Okay, so I have hedged my position. So this is, I would say, see, you can see the name, it is a short iron butterfly. So what is a short iron butterfly? I am selling a short straddle, I am deploying a short straddle, and I am hedging my position against the short straddle to protect a swing on the either side. Okay, now see here for 29th August, you can see the expiry. Okay, so there are 34 days pending for this expiry. Today is 26 July and the expiry will be on 29th August. So there are approximately 34 days pending. So say for example, I am willing to hold my position till the 29th of August. That is till the expiry I am willing to hold my position, say. Okay. Now see how the payoff looks like. Okay. Now let's go to the chart to understand it better. Now say as this is as we are approaching, as we are like deploying a strategy to trade a sideways market, definitely you will be making money if the stock stays sideways or if the stock stays range bound. Okay, so see the maximum profit that you will be making is somewhere around 870 levels. That is, if the stock say remains somewhere around 860, 850 or 870 levels, you will be making the maximum profit around 865 levels. Okay, 865, 860. So 860 to 870 is where you will be making maximum money, I would say. And if the stock moves to say 945, you will be losing 3750. And if the stock say falls down to say approximately 700 levels or 760, 765, you will be losing 18,000 on the downside. Okay, so this was a short iron butterfly strategy. Additionally, what you can do is you can, or else if you want, you can go and create a short iron condor as well. Okay, so instead of selling a straddle, you can sell a strangle. Say for example, 860 is a CMP. I will be going one strike OTM and give me a second. I will be going one strike OTM call and one strike OTM put. Okay, so see, this is a short iron condor strategy. Okay, so the payoff is more or less same. Okay, you can choose whichever strategy as per your convenience, you can go and choose. So see, this is how it looks like. So on the downside, you can say 825. If you deploy a short iron condor on the downside, you can say approximately 820.25 is your break even, and on the upside, if the stock surges, your break even is somewhere around 895 to 900 levels. You can also see the expiry break even over here. Okay, so this is how it looks like. Okay, so I hope you understood this strategy. So this is one of the widely known strategy which people use, short iron butterfly or short iron condor, whenever you expect a stock to stay sideways, or if you expect, so you can deploy this strategy on index stocks. Okay, so this is how like you can explore these two strategies, and you can definitely use option architect. And also if you see I have deployed 34 days, or else if you say I want to hold the position for say 12 days, accordingly the payoff will change. Okay, so you can backtest this. This is one of the good tool for say paper trading. Okay, so you can backtest this tool. So that's all from my hand. I hope you definitely enjoyed this video. Explore more tools, and we'll get back to you, and we'll see you in the next video soon. Thank you.